The best way to invest today is to find companies with solid core that are building our future. The renewable energy industry is booming while the world is switching to cleaner energy and demand for electricity continues to increase. More and more companies are declaring zero emission goals and the number of electric vehicles increases. There are a lot of companies that will benefit from the increased demand for clean energy, but today I will share with you which two of them I think are the best for dividend investors. The first one is NextEra Energy. Everyone has heard about this company, but most of us know only the main way that they are making money, and this is their renewable energy park. NextEra is the largest producer of solar and wind energy in the world and expands more and more. The company has plans to invest between 50 and 55 billion through 2022. It currently has 26 gigawatts of power capacity, most of which are solar and wind, and plans to build 30 gigawatts more by 2023. NextEra has more energy storage capacity than any other company in the US, more than 180 megawatts, and that's not all. There is another way that they are making money. NextEra is the largest regulated electric utility in the United States with more than 11 million customers. That means that it's been given a monopoly, but in exchange, its rates must be approved by the government. This means slow and consistent growth for NextEra regardless of what is happening on the stock market. This consistency and growth are the things that dividend investors are searching for in a company. NextEra has generated more than 9,000% total shareholder return over 15 years. Its current dividend yield is 2.12%, and for the last 5 years it has 12.1% compound annual growth. Dividend increases with this pace are amazing considering that NextEra is a dividend aristocrat and has increased its dividend for 27 consecutive years. Adjusted earnings per share are expected to grow between 6 and 8% year over year for the next few years, and expected dividend growth for 2022 is 10%. Nothing of this is guaranteed, but I believe in the white future of the company, and looking back in history, NextEra has shown that it knows how to grow its business and how to reward its investors. Now let's go to the next company, which is Atlantica Sustainable Infrastructure, ticker symbol AY. This is a smaller company. Its market cap is around $3.5 billion, but it's heavily investing in its expansion. Atlantica Sustainable is a UK-based company, but it is highly diversified. It operates globally with assets in North America, South America, Middle East, Europe and Africa. In addition to renewable energy, the company also owns water and traditional power assets. In April last year, it bought the third largest US geothermal power plant for $170 million, and in June it bought a portfolio of 4 wind assets again in the US for $197 million. Those investments kept the company on track with its long-term growth plan. Atlantica is targeting to invest $300 million per year to 2024. That should support the company's ability to grow its dividend. Since 2018, the company has increased its dividend at 12% compound annual growth. Since the start of the year, the company's share price is beaten down and now the dividend yield is 5.5%. I think this is only short-term volatility and nothing fundamental has changed. Its cash available for distribution rose by 13% in first half of 2021, and it also grew its revenue by 24% during that period. Moreover, Atlantica plans to reduce its debt loan from 4.8 billion to 1.9 billion in the next 5 years. I think it's a relatively safe stock because Atlantica Sustainable is focusing on owning infrastructure that is crucial for one more sustainable future. And further, it takes lower risk approach by owning assets that generate stable cash flow backed by long-term contracts. So I'm bullish about the company and have some shares of it. With that 5.5% dividend yield and its growth potential, it's the perfect addition to my portfolio. I want to make it one of my biggest positions, and as a matter of fact, I bought some more this month. This is all for today, so if you like this type of content, make sure to subscribe. See you soon, bye bye.